Hi, welcome to Alice Chin's podcast. I'm sitting here with Alice Chin, and this is episode 19, and we're going to do things a little differently now. We've had a lot of current events, and the focus is wars. Not only do we have the Iran conflict that's happening, but we have bidding wars, we have company wars. There's just a lot of chaos in the industry of real estate that's impacting your chance to buy and possibly sell in this market. So let's get right down to it.
Sounds good. Awesome. How are you doing, Bill?
I'm doing well. How are you, Alice?
I'm good. It's been a little while. So
It has.
Yeah. So how has the war, I'm going to ask you a question to start, actually.
Okay.
Yeah. I hate to put you on the spot, but
Love it.
how has the war impacted the mortgage industry and financing and things like that?
Yeah, just within the last 3 weeks. So at the time we're filming this, it's been about 3 weeks of the Iran conflict, and we've seen gas prices skyrocket.
Yep.
That's the first sign. And then we've also seen interest rates. So they're not crazy high, but they've gone up about 0.5% since the beginning of the war. And that's played on, payment shock, people really, kind of questioning your integrity. It's just crazy because, when we say that the rates have gone up 0.5%, it's a hard sell to anybody. Like, nobody wants to hear that. And we've experienced that even from COVID to now. The rates are too high. Well, the rates were too low back then, right? So
They're historically low, I heard of. Yeah.
So that part of it's part of the reason why we're here today, where it's a lack of inventory, because there's a lot of people that have low interest rates. And when you see the rates so volatile, it messes with the consumer confidence.
That makes sense. Yeah.
How are you seeing the impact?
The impact, people are just a lot more nervous, I think, generally speaking. Just really don't know if it's the right time, quote unquote, to sell or buy. And then just a lot of hesitation. That's what we're seeing. Yeah.
Are you seeing deals surface then go away, or?
Yes, we are seeing that. I feel a lot more. Again, our data sample is smaller, much smaller, of course, than the broader industry, but we're finding that a lot of deals more fall apart. I want to say on our team specifically, it's probably closer to 1 out of every 7 or 8, which was not the case, even a couple of years ago, a year ago.
Right.
So I think people just generally are very nervous.
Yeah. I mean, how are you educating people on this current event that's happening right now?
Yeah, I think I'm just telling them to keep their eye on the long-term, prize, so to speak. And so if their goal, kind of going back to what their original goal was, right? Mm-hmm. If their goal was to purchase a home, for example, if they're a first-time home buyer, then kind of keeping that end goal in mind, right? Why did you reach out to us originally? Why did you embark upon this originally? Yeah. It was to get a home, right? And to become a first-time homeowner, for example. And then kind of just rehoning and reaffirming that original goal. Yeah. Selling is a little bit different because usually there's a compelling reason one way or another as to why somebody is selling. And then so kind of going back to that, right? Like, does that still hold true? You originally reached out to us because, you have a job transfer, or you're being relocated, or sadly, unfortunately, you had a death in the family, right? Whatever the reason is, right? Then we kind of go back to that. Yeah. And trying to help them achieve, whatever it is that they originally reached out for.
Yeah, the motto is buy when you can, sell when you want to.
Yes.
Or when you have to.
When you have to.
In certain points, it's when you have to. So not every sale is a happy
It's
sale.
not. No, unfortunately. And on the buy side too, I try to get them to understand, as I'm probably sure you do, is to kind of look at the bigger picture, which is interest rates may seem high, quote unquote, to them, but they have to look at the whole history, right? Like, what were interest rates at its very highest? Mm-hmm. What were interest rates even on an average? Like, if you look in the back last 30 years, 40 years, right? And then so when you look at it that way and through that lens, then the current interest rate landscape doesn't seem that crazy. It seems actually pretty modest. Yeah. So.
And if you think about the fact that real estate is most of the years that we've been in the industry, or even further, real estate has always won. There's only been like 3 years that we've had a real loss.
Really loss in real estate, yeah. So, you mean like from values?
Yeah, value and just the markets in general.
Absolutely. Yeah, I always tell everybody I would rather put money in real estate than like even the stock market, because like the stock market is constantly, it's more volatile is what I would say, And so real estate is more of a long term, for sure. It's not like a quick, generally not speaking, it's not a quick turnaround sort of gain strategy, but I think it's safer.
Yeah, wise investing is like watching grass grow.
Yes.
And that's the motto that we always use is you're not in it for the quick, because if that's the case, you're buying cash flow. Like you're buying, investing in like Airbnbs or flips, and those are higher risk anyways.
Those are a much higher risk. Yeah. So, yeah, I would just say that that's typically how I view real estate, as an investment. And then so that I kind of explain that to our clients as well, so that they can understand.
I think the service industry, needs to level up during these times with education.
Oh, for sure.
So one of the things that, we try to do is really get in front of the client. And a lot of times what I'll do is I'll do that virtually just because it's quick, it's convenient, it's comfortable.
Yeah.
And so when you actually can put pen to paper and show that visually, the two things that people want to know when they buy a house, what am I coming to closing with and what's the monthly payment, and work from there and camp out on the monthly payment, because that's the one that's going to be hanging out afterwards for a little bit. And it usually goes up because of the fact that you have taxes and insurance changes and so forth. But I think once you get the comfort from them and you educate them, then it's an easier pill to swallow in this market when you have rising rates.
That makes sense. Yeah.
So
that makes sense.
Yeah, I think education's key. So what do you guys do as far as your buyer consultations? Like when you do meet with people?
Yeah, so we always meet, we try to meet in person at the office. If they cannot meet in person for some reason, we always do a video call, live call. And so then we go over, because of all the changes that have happened in the industry over the last 18 months, we have a whole structure that we go over. So we ask them what they know currently about the buying process, about buyer agency, about dual agency, about the contract, the purchase contract, things like that. And most times they come to us, they don't know a ton, right? Sometimes they know a little bit more because, they've read the latest article or whatnot. But then we kind of go through all the highlights, right? So we go through how buyer agency has changed, how we are compensated, of course, how that has changed, what the new requirements are before we even physically go show them a property, that we have to have a buyer agency agreement signed. We also explain to them kind of the buying process, right? So that they understand kind of the steps along the way, what we are there for, kind of what value add we provide. And then we have a frequently asked questions actually list that we give to them.
Okay.
And then we ask them to just, not study it, but if they have any additional questions, of course, we're happy to answer. And then we also go over in detail blank set of property disclosures so they understand what they're looking at when they submit an offer. Yeah. And then a blank 8.0 multi-board.
Wow.
So we go over the changes that have happened from the 7 to the 8, especially with the inspection provision, what choices they have, and then again, how commission is paid.
Yeah. Yeah. Wow, that's great. I've had agents on buyer consultation calls too, and I think one of the things, and this is a good transition into another war, is bidding wars. So
yes.
One of the things that we'll do is we'll actually just talk about the numbers, make sure they're comfortable, and then there's a two-parter when we do a consultation is literally going from comfort to leveraging your offer.
Yeah.
So when you're talking to a buyer, what types of things are you talking about when it comes to leveraging their offer?
Yeah, so that is a part of our buyer consultation as well. So we go over the fact of what the tempo, what the climate is of the current market, right? How competitive is it? What is how many months of inventory do we have, right? Compared to the demand. To paint a picture of and set correct expectations for them before they even set foot, right, into the market space and try to compete. So we do go over the fact that it's not always price, right? Price is, of course, very important when you submit an offer, but there are so many other aspects of the offer. So I explain to our clients that we always try to get as much information as possible. So what is the seller looking for in terms of closing date? Sometimes the seller doesn't want a closing date that's super quick. Sometimes they really need post-closing possession, right? So we ask those questions ahead of time. Okay, what is the seller's preferred closing date? Do they need a rent back, post-closing possession? What is the situation? Then we also explained to them that we could use something called an escalation clause. I know certain agents hate escalation clauses, but as a buyer agent, I always have to ask if the seller will accept one or not, right? To best represent my client. And so if they do allow one, then I explain to the client at our initial consultation what that entails, right? So it basically says you'll beat the next highest offer by a certain amount, and then usually there is a maximum on an escalation clause. Right. So that is a way that we can compete, right? Yeah. Another item is the appraisal gap addendum, which I'm sure lenders hate.
Yeah, yeah.
So the appraisal gap addendum essentially says, as you know, if the property doesn't appraise out, which sometimes happens with these bidding wars, right? That the buyer then is not only willing, but able to bridge that gap, right? Sometimes we write in, they'll bridge it up to a certain extent, right? Because you want to be smart about it. You don't want to just go like, crazy and say, oh, I'm going to waive everything, right? Up to $100,000 of gap. Right. And sometimes, depending on what the comparables say and what I feel like, okay, this is what the reasonable band that it will appraise out at, right? Then they can make their decision as to how much of a gap they want to cover, possibly. Yeah. And then the inspection provision, as I mentioned just earlier, is another way to kind of strengthen their offer or differentiate. So they can always do as is, because that's a separate paragraph. But then they have to choose between waiving the inspection, which I almost never recommend, because that's just, you're not doing an inspection at all, or inspection with requests or without requests.
Yeah.
So a lot of times what we'll see in multiple offers is a buyer selecting the inspection without requests. And so I explained to the clients that they can still do an inspection, but we just can't make any requests.
Right.
And if something is really, really bad, if it's a material defect or something catastrophic, they can always back out.
Yeah.
And get their earnest money back.
Yeah. Yeah. Wow. Yeah. I've actually, it's funny. The appraisal gap is interesting. I always tell people the lender's always going to finance off the lower of the two.
Yeah.
Because I've also had the question, well, what happens if I buy a really good deal, which it's going to probably be hard to do in this market, right?
Yeah.
But what happens if I buy a great property and it's undervalued and it's really worth like $500, but I buy it for $400? Can I use that equity? Not right now, but you can eventually.
Later, yeah.
So we're always going to finance off the lower of the two.
Yep.
So whether it be the appraised value or the contract price.
Yep.
But the other thing is waiving the inspection. I've actually seen a couple like that.
Yeah.
And so
That's really risky.
Yeah, I don't get that. Like you're basically buying you're buying a car without looking at the engine.
Looking at anything. Yeah. You're just saying, oh, it's good. Yeah.
Yeah. Let's just go with it.
Yeah.
Okay. Well, that's a very, very risky play. Yeah. So I'm glad you said that, because I think that is one of those pieces that the agents have to kind of protect their client with.
Absolutely. Yeah. There are a couple of things that I found actually just being in the field in the last probably 6 months, which are kind of concerning, that I think a lot of clients and agents should really know about. So one piece is the insurance piece. So I had something recently, and I'm actually dealing with a slightly worse situation currently in dealing with homeowners insurance. And so I think that it's important for buyers, and we tell them now, all of our buyer clients, to shop for insurance right away, like right once they're under contract. The reason is because insurance costs, as you know, have skyrocketed.
Oh gosh, yeah.
And so it's always a good idea for them to shop around, but then also it's impacting deals, because if the current owner has filed an insurance claim, right, it could affect like the new homeowner, right? Yeah. Insurability.
Right.
But also there is not only on the contract, but during attorney review, at least in Illinois, the attorneys will often ask, the buyer attorney will often ask the seller attorney, hey, has your client made any insurance claims, et cetera, right?
Yeah.
And so that better match the property disclosure. Do you see where I'm getting at?
Right,
and if it doesn't, then it's going to create a lot of havoc, actually,
Yeah.
Because if the buyer waits to shop for insurance and then finds out that actually I either can't get insurance or the insurance is going to come at like 5 times the cost, and they find this out like 2 weeks before closing, that's a giant problem.
That's really, that's a great point. I have a client literally going through that right now, because they are buying a house that has a cedar roof.
Oh, cedar shakes. Okay.
Yeah, it's basically created a question whether she can even get insurance.
Yeah.
So she had to go through a broker. Broker finds insurance. I think the list price was like mid-6s.
Okay.
The insurance quote she got was $8,700.
Oh my goodness gracious.
And everybody's like, okay,
well,
so you can afford it, but like just know that once you get a new roof, that could come back down.
Yes.
So their insurance companies are being just as diligent about the home, and
they really are. And speaking of roofs, so that's another reason why not just cedar shake roofs, but if a roof is like at the end of its useful life, is what the experts and professionals say, right? If it's an older roof, that could also impact whether or not you'll be able to get insurance.
Yeah.
So I have had experience where the insurance company was like, no, I cannot insure this house until the roof is replaced.
Right.
And you're like, oh, okay, well, crud, what do we do? Like we're listed right now and we're under contract, right? So then the seller has to replace her. I have a situation right now. The seller is replacing the roof.
Yeah. And that happens a lot down in Florida, by the way.
Yeah, so I'm sure.
In Florida, it's like the max lifespan that an insurance company will insure is probably about 10 years.
10 years, yeah.
Just because of the climate down there.
Oh, that makes sense. Yeah. Yeah.
So wow, it's interesting. It's something we weren't even thinking about talking about, and all of a sudden, look at what you did.
I know, very thrilling stuff. Yeah.
Well, but it's also just things that you see on a daily basis. You know,
and correct. Yeah.
When you're doing a lot of deals, these are things that pop up that people need to know about.
That people need to know and be aware of, and kind of just like these pitfalls. Yeah.
What are you seeing from a listing site? Like, so I know we've asked this on panels before, but when you see, let's say, like I had a deal the other day. Actually, I had 60 offers. Can you believe that? 60 offers. But let's say that you had something like that. What are you looking for as a listing agent?
Yeah.
When agents, clients, buyers come through and they're wanting to put an offer in, what puts a different pile?
So we had a situation actually just yesterday that we're working through. I think we have 8 offers. Yeah.
Okay.
So not 60, but
Well, mine was like, I don't know.
So we typically don't laugh. We typically do a spreadsheet because it's impossible to keep track of all the factors of each individual offer.
Right.
Okay. And then what are we looking for? It depends on what our seller is looking for. So we always go back to that. So it's not us, we're not the ones making the decision. We're not the ones picking. So we go back to our seller. Of course, we present everything to them because we have to. And then we ask them, okay, again, what is most important to you? And sometimes it is price, but other times it's a balance, because on one offer, the price might be better, but then the terms on another offer might be better, right? So there's too many nuances to kind of give like an overarching answer. But if we know, for example, this is not this example, but if we know like this particular house wouldn't pass like an FHA appraisal, right? Or inspection, right? The scrutiny, then we might not take an FHA offer, right? Sure. So it's just things that we know about the scenario and that we let the seller know so that they can make the best decision.
Yeah.
But sometimes it is the price. Sometimes it's, they allow an escalation clause. So then we have to kind of let's see how that plays out and do the math. Other times it's whoever provides the best terms, right? Maybe it's a free post-closing possession. Maybe it's the best closing date that they're looking for, right? Maybe it's the financing. Maybe the person's paying cash. I know you don't like to hear that, but maybe they're paying cash with option for financing, and that's the strongest offer.
Right.
And even with financing and lenders, a lot of our buyers, in order to compete, right, in these crazy offer situations, right, they still get pre-approved and they still are intent on getting financing. But what is it called, Bill, when it's basically almost the same as cash, when they're like
fully
underwritten, and basically they can close pretty much.
Yeah, the only thing they're missing is title, insurance.
Yes.
Hopefully it's good insurance.
Right? Yeah, hopefully it's good insurance. We just talked about that. Yeah.
Right.
But sometimes, sometimes that's the route they decide to go, with the cash with option for financing, even though they are intent on doing the financing. Right. Does that make sense?
Yep.
So it just makes it so that they have the ability to pay the cash, but they still have that flexibility, but it's not contingent on the financing, right? And so we've had some buyers win that way by kind of using that, section.
Yeah.
Because in some scenarios, it's almost impossible to compete with cash offers, right? That's like the only way. Yeah.
Yeah. And on one of the panels, I remember hearing somebody say that the agents look at two things. One, page 13, who's on the deal, because that's
that's true too. Yes.
And then also the terms.
Yep.
So the two main things they look for is when you see agents come through, are you still seeing a lot of lazy packages? Like, I think there's art to the deal when you're packaging it up. So are you seeing that happen right now?
Yeah, so there are some that are just, you kind of shake your head like, what are you doing?
Yeah, you're not serving your client at all.
No, not at all. Or like, you know what my biggest pet peeve is when somebody sends over an offer, but like sends it through like dot loop. And you're like, you're going to ask me to log into dot loop, click.
Yeah, what is up with dot loop? I think it's hard. Even when I get it on a lending side, I'm like, it takes me like a good 5 minutes. And
you're trying to get into like Fort Knox. So you're like, okay, finally I got it.
Some of you, forgive me, dot loop, but your system is really kind of wonky.
I mean, it's not just dot loop. I mean, I hate to like attack them,
no, I'm not,
put them on the spot, but like, any agent who like submits an offer through another portal, like, what are you doing? Just, can you combine the PDFs into one file and then send them to me in one file, please?
Right. Make it easy.
Make it easy.
Like, the last thing you want is to feel like you said, logging into Fort Knox. But that's what every time it's a pet peeve of mine, just seeing that with agents.
You're like, oh my gosh.
Because you got to sign up. I have to be a member or whatever you call it. But it's just, it's one of the hardest things to get into.
Yes. So, and then there is an art to it. So I'm glad you spoke to that. The last page, I think it's page 14.
Oh, 14 now. Sorry.
Who the agent is, unfortunately does have some bearing. Like, have we worked with this agent before, So I use that as a secondary measure. So I do the spreadsheet, I compare everything, and then I usually pare it down. So if there are multiple offers, we pare it down to the top, like 2 to 3, right? Yeah. And if they're super close, like just hard to say, right? Then we start looking at page 14, and
really?
And then we say, okay, who's the agent? Who's the lender?
Yeah.
Who's the attorney that they've written down? Have we worked with them? Yeah. Are any of them on our blacklist? We do have a blacklist.
You do have a blacklist.
Our team has a blacklist, yeah.
Very interesting.
Like, have we had terrible experiences, right? Then that'll be like an X, right? For example, right? Yeah. But we only go there if it's like, it's so close. Right. Like, you just can't, differentiate between. And then we give that information to our seller. Again, they still make the final decision.
Sure.
But we kind of tell them what our experience has been, right?
Yeah.
And then if the lender calls, too, that plays a huge part in it, that could make or break it. Yeah. Because if there are 3 offers that are very similar and only one lender called us, right?
I still have agents that don't, it's just mind-boggling, because I think there's a package of a team that goes along with that to hey, is my lender going to be working on a Sunday?
Yeah,
because that's when a lot of times there's the highest
what
and
is
best.
The feeling that I'm getting from this? Like, am I confident that this is going to get to the finish line? That's all I care about as a seller's agent, right? Successfully. And so we look at that, and then I'm trying to think what else we look at. That's about it, I think. And then we make a decision. Yeah.
Wow. Yeah, and I didn't know you had a blacklist.
We do. It's very extensive.
Wow. Well, after years, after all the stories we heard,
I know.
No names are provided. Don't worry.
No.
Wow.
So,
okay.
Yeah.
All right. Yeah. So that, I think bidding wars has been. I mean, we saw the market open up at the beginning of 2026, right out of January 1st. It just started. We're starting to see a little difference here, but I'm still seeing that there's like this weekend we had 7 offers out.
It's still multiple offers.
It's still there, and this is also suburbs. City's a little different.
City's different.
So it's funny. We live in Illinois, but there's 2 different types of markets in our area. You got the suburbs, and you have the city. Suburbs are multiple offers. I think city is a little different.
Yeah.
Let's go into companies.
Oh yes.
Let's go into the wars.
A hot topic right now.
The wars of the companies. So you're with Compass.
I'm with Compass. Yeah.
Let's start there.
I just actually celebrated my 6-year anniversary with Compass yesterday. Yeah.
All right.
Yeah.
Congratulations.
Thank you. Yep. So Compass, I want to say it was last year. Yeah, last year they made the public announcement that they were suing Zillow. And the reason for that is because Zillow decided to announce a policy at the time that they were going to ban any listings, any coming soon listings, which in our area, we have an active private listing network. So basically, it's any listings that are in the private listing network that have been publicly marketed and not activated, right? And so not syndicated to Zillow and other websites within, I think it's 48 hours. And so they said very publicly that they were going to ban all of our listings, all of our listings that were not, publicly facing. And so I think the original intent was to target, so Compass has something called the Compass Private Exclusives, which is our own internal, basically pocket listing portal. And so I think they were concerned, Zillow, that we have this internal pocket listing portal that we're not sharing with anybody. And that's how their business model works, right? So their business model works by taking the listings that listing brokerages have obtained and then marketing them and then repackaging it and then selling it to other agents, right, who sign up for their services to get leads. That's been their business model for a very long time, for 20 years probably,
Okay.
And so to be honest, my opinion is that their business model got threatened. Their very survival was at risk. And so then they just said, you know what, we're going to ban your listings. Like you're going to not be on Zillow if you do this, And so our CEO, Robert, basically felt that it wasn't fair and it wasn't right, and that the sellers, the clients, should have the decision of how to roll out their listing, right? Not us, not Zillow, nobody else really. And a lot of our clients, and I can only speak to our clients, I can't speak to like the West Coast or the East Coast, but our personal clients, a lot of them like to start off in the Compass Private Exclusives because they're not ready. We have probably 5 or 6 listings right now in the Compass Private Exclusives. They're not ready. They're either going through some sort of major life change or they're getting the property ready, okay? And they just don't want to be pressured, And we don't have to allow showings, as I tell people, we don't have to allow showings at all when they're in the Compass Private Exclusives. If we do allow showings, obviously we have to be fair. We have to let everyone who wants to see it, see it. And then they go into the regular, so almost 100% of our listings don't stay in the Compass Private Exclusives. You know what I mean? Like, right. So everybody's saying, oh, it's because Compass likes to double end things, and it's because they like to keep things to themselves. And,
right.
It's not right because it doesn't give the listings full exposure. I would say almost 100% of our listings go from Compass Private Exclusives to the private listing network to full activation. So like the accusation that like we're doing this as a self-serving thing and that we hoard all the listings and we keep them all in the Compass, in our market for our team, our listings don't stay in the Compass Private Exclusive. So we go through that whole iteration of the 3 steps and the 3 phases. And I truly believe that we give them the maximum exposure because they go through all the phases.
Sure. Sure. Plus, it's an exclusive sale for you. So, like, if you're creating something that is going to benefit your business, I mean, I think everybody has like this love-hate relationship with Zillow.
Yeah.
Like realtors use them, but they hate them.
Yeah.
Yeah. So but you're going, listen, we're going to be successful no matter what. Why can't we? Yeah. Why can't we just do it the way we want to do it?
Correct.
This is our business
and
model.
It's not even us. It's and Robert has been saying this from day one. He's never wavered. It has never been about Compass. So like the attacks from other companies, the saying that it's self-serving and all that, it's actually really hurtful because his message from day one has never changed. It's basically what the consumer wants. What do they want? What is in their best interest, right? And if they decide that they want to stay in the private exclusives, they should be able to decide that. Yeah, not me.
No strong arm.
Exactly. Right. Not Zillow, right?
Yep.
Not anybody else, honestly. And we have them sign forms that say like, we've explained all the benefits, the disadvantages, everything. And are you sure you understand? So we don't pressure them. to stay in there or only be in the private listing network. We don't, genuinely. Yeah. We explain to them that, this is the exposure that you're going to get. It's just Compass agents. Okay, now in the PLN, the exposure is all of the brokerages, right? And then full activation is everybody. And then it syndicates to all the websites, right? So I think Zillow I've never been a fan of, at least for the last 9 years since I canceled my Zillow, membership, Premier Agent that I was paying gobs and gobs of money for their leads. The reason is because I found that the same leads they were selling me, they were already in my database. So they were just repackaging. Yes, wow, I know, shocking, right?
Yeah.
And so I canceled them, about 9 years ago, and I've never looked back. And their whole business model is selling leads from other agents' listings.
Right.
And so
some people and some agents live off of Zillow.
Oh,
they literally
do. Some of them do. But if you think of it from the opposite perspective, as a list agent, right? If I get a listing, I worked very hard to get that listing, more than likely, okay, especially in this market. And so I should benefit, or my team should benefit, honestly, from the leads that come from that listing, not agent XYZ who paid Zillow to get leads. That doesn't make any sense,
Yeah, that's a great point.
And then also, who will know the most about the listing? Not agent XYZ, it's going to be my team because we have the listing. So we know everything there is to know about the listing.
Yeah.
So again, it just goes back to we should have control of our data. We should have control, of our business in terms of we earn the listing. So we should get the leads that come from it.
Right.
Honestly.
Yeah.
And it's misleading for the consumer because if you ask any average consumer, right? Oh, when you click on that listing on Zillow, did you reach the listing agent? Do you know if the person you talk to is a listing agent? They have no idea. They think it's the listing agent.
Yeah.
But it's not.
Right.
It's whoever paid the most money to be on Zillow.
No, I agree. It is deceiving because it looks like that is, as a lender, when we go to look for the property for the client, I'm like, oh, who's the listing? But that automatically pops up as, it looks like it's the listing agent, but it's not. It's just it's a lead gen thing.
Mm-hmm. It's not. Yeah.
So let's leave it with this. So when you think about, you mentioned double in. To anybody that doesn't understand what that means, let's unpack that for sure. Because if you are working the private listing on your
just on the Compass,
just on the Compass, then that would be a question, right?
That would be a question, yeah.
So how do you handle that as an agent?
Yeah, let's unpack that whole thing. So that's another very hot topic and kind of a weapon of choice that a lot of other agents and other brokerages are using, saying that it's because you like to double end things, it's because you like to keep it in-house, and surmising that it's anything but that is basically just a lie. Okay, so again, I think it's dangerous whenever anyone makes sweeping statements like that, right? Because as I've mentioned, everything is very hyper-local, very hyper-agent team specific, right? Yeah. So on my team, we hate dual agency, and we make that announcement every single day to our clients.
Right,
okay, we do not prefer to perform dual agency.
Yeah. So just to kind of clarify, so when you say double in or dual agency, that means that it
is the only agent is also the buyer agent.
Yeah.
Right? So they're representing
both. Conflict of interest.
It's a huge conflict. Yeah, and I've never liked it. Okay, ever since I started in the business, actually. Okay, it always made me queasy. And so
you've done it before, though, right?
We very rarely.
Very rarely.
I would say super, super rare. Okay. And it's only because the client genuinely wanted us to.
Okay.
Not because we wanted to. Okay. So the first time we talk about dual agency and a listing is during when we sign the listing paperwork. So it's on our paperwork, and we generally the conversation goes like this: Bill, we hate dual agency. This is the dual agency paragraph. Dual agency is when there's only one agent in the transaction. We feel it's a conflict of interest, okay? We would prefer that you mark no, okay? If you want to have a further conversation about it and you feel strongly against that, okay, let us know and we could talk about it. But again, we don't, even if you mark yes, it's not going to be me, okay? It will be, I don't feel comfortable with it, bottom line. So it'll be another agent on my team, or we'll refer it out to somebody else in Compass. Are you okay with that?
Yeah.
And the seller typically says, yeah, sure, okay, that makes sense. I mean, we don't like dual agency either, So that's how we talk about it on our team.
From a consumer standpoint, you're like, okay, well, wait, they're not wanting to make money. Like, how does that, like...
I kind of explained, I said, it's not about the money. It's about, like, I wouldn't genuinely have your best interest at heart. It's a huge conflict. How can I say and sleep at night and say that, oh, yeah, I represented that person's best interest when I was on both sides?
Yeah.
You can't. I mean, you just can't. And then I explain, we go really deep into it because we say, like, okay, as a dual agent, this is what we can and cannot do. Like, we literally go down every single line of what that section says in our listing agreement.
Okay.
Yeah. And then we say, are you okay with that? It's some people, very rarely, but some people are like, yeah, I don't care. You know, like, and then we're like, okay, well, we're going to mark yes, but then we're going to put over here that it's not going to be me still.
Yeah.
It's going to be this person on the team, or it's going to be somebody else in Compass.
You just made it much harder. Yeah. I think, like, and that's the thing I see with our world too, is that the consumer's going to do what the consumer wants to do. You have to control them to a degree, but they're going to basically
do what they want to do.
Yeah. Somebody wants to do a rehab loan, which is like a nightmare. Okay. And they're 620 FICO scores, like, which is hard to get done anyways. And then they throw another curveball. It's like, okay, this one's going to be harder than I expected, but okay.
But sure. Yeah, exactly. And then on the buying end, we also explain it at the buyer consult. Like, what is dual agency?
Oh, good.
Is it possible, right? Yeah. Let's take a look. What is our current inventory? Do any of these homes match your search criteria, right? Like, what is the probability that we'll have to be asked to perform dual agency, right? So we go over all of that. And so then they also sign yes or no, right up front when they sign the buyer agency agreement, okay? So I can tell you right now, it's very rare for, I don't know why, it might just be luck or bad luck, I don't know. But in 21 years, we've probably done dual agency in less than one hand, like, honestly.
And out of those, like, it almost kind of feels like it's a divorce situation, right? Like,
it is.
When you're dealing with a divorce, you have two people, and that's kind of working with two emotional factors, and somebody's gonna be like, well, you're working harder for this person than the other person.
You just can't.
So do you have, out of those, few that you did they all go well, or were there mostly not
No, they were mostly unwell. Yeah.
Unwell. So it's unwell.
Which is why I was like, no,
Yeah.
And it could just be me. You know what I mean? Like, some agents, they do dual agency like it's nothing, So I think it could be just an individual, not only individual preference, but just like what we call it, your mojo, your juju with dual agency. Like, it's just not good for me. So.
Well, I just think it's also, our industry's big, but it's small, right? So, like, you're hearing this from the rest of the community talking about how you guys are actually putting your private listing together, and they're like, wait, they're trying to get dual agency.
Yeah, and it's like, oh.
But then there's agents that literally act like that.
They do.
And so there's.
So I can't speak for them, but.
Yeah, and we were talking offline, but in Indiana, there's a gentleman that does this all the time.
All the time.
So he has a pocket listing, which pocket listing is not to the public yet, and he's already marketing that to his client database before he even puts it on private listing.
Correct.
Or the true listing. So he's using it as a way to build a portfolio to show he's got a ton of listings, but he's already got a buyer for it, and he doesn't market contingent until maybe a couple days after he has it listed.
Oh, no.
So there you go. Yeah. And that's where you get a bad rap on this.
That's not good. Yeah, that's not good. Yeah.
So, yeah. Well, I appreciate, this was a great conversation, because I think it needed to be like marked urgent, because we are in a lot of chaos in the industry with all the economic wars, and not only that, but the physical war of Iran and what that's actually doing to the industries as a whole.
Yeah.
So thank you so much, and we'll see you on the next Alice Chin podcast. Stay tuned.
See you next time.